Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 30th, 2025, and we are taking a close look at AUDUSD, the Australian dollar versus the US dollar. There's a fascinating tug-of-war happening in the fundamental landscape for this pair. On one side, we have a hawkish Reserve Bank of Australia, which is contending with hotter-than-expected inflation. Australian consumer prices have risen for 4 straight months, putting pressure on the RBA to maintain its cautious stance and even reviving the risk of further rate hikes. Conversely, the US dollar is facing significant headwinds as the market increasingly prices in Federal Reserve rate cuts. Dovish commentary from key Fed officials like John Williams and Christopher Waller has pushed the probability of a December rate cut to around 80%. This monetary policy divergence is creating a very interesting dynamic for the pair. Despite the dovish Fed talk, long-term expert forecasts are actually predicting potential record lows for AUDUSD in 2025, citing the ongoing central bank policy imbalance. Adding another layer of complexity is the political landscape, with a potential return of Donald Trump to the White House possibly sparking a global trade war. Now, let's see how this news is reflected in the price action on our charts. Looking at the daily chart, we can see a clear, multi-month downtrend that began after the pair failed to hold above the 0.69 level back in late September 2024. The price saw a significant decline through the end of 2024, eventually finding a bottom in early 2025. After a period of recovery and consolidation for much of this year, the downtrend has clearly resumed over the last couple of months. Let's zoom in on the price action since the beginning of October to get a clearer picture of the recent moves. We can see a series of lower highs and lower lows, which is the classic definition of a downtrend. A key area that analysts have been watching closely is the support zone between 0.6440 and 0.6420. Looking at the chart, we can see the price tested this zone multiple times in mid to late November, hitting lows of 0.6422 and 0.6418 before finding solid buying pressure. This support level has acted as a floor for the price since early August. The bounce from this level has been significant, particularly the strong bullish candle on November 26th. This rally directly correlates with the news of increasingly dovish Fed sentiment, which weakened the US dollar and provided a tailwind for the Aussie. The price has since pushed up to our current levels, battling resistance around the 0.6540 mark. This recent push higher represents a potential short-term trend reversal, but it is now testing a critical area. Switching to the 1-hour chart, we can examine this recent rally in more detail. We see the consolidation that occurred around the 0.6450 level last week, building a base before the strong breakout higher on November 26th. The ascent was swift, moving from the mid-0.64s to challenge the 0.6540 area in just a couple of days. Over the last 24 to 48 hours of trading, the momentum has stalled slightly. The price has entered a period of consolidation, trading in a range just below the recent highs. This suggests the market is pausing to digest the recent gains and is looking for the next catalyst. On the 15-minute chart, we can see this recent consolidation even more clearly. The last several hours of the trading week showed choppy, sideways price action, characteristic of a market in equilibrium as it awaits new information. Volume has tapered off, indicating indecision between buyers and sellers at these levels. Traders are likely waiting for the new week to begin and for the upcoming slate of economic data. So, let's return to the daily chart to recap and look ahead. The key price levels are very clear. Major support remains at the 0.6440 to 0.6420 zone. A sustained break and close below this area would invalidate the recent bounce and signal a continuation of the broader downtrend, with a potential target near 0.6300. Immediate resistance is right where we are, around 0.6540 to 0.6555. A decisive break above this level is needed for bulls to take control in the short term, potentially opening the door for a move back towards the late October highs near 0.6620. So, what are the likely scenarios? The bullish case, which I'd place at about a 40% probability, relies on the dovish Fed narrative continuing. If upcoming U.S. inflation and employment data come in weak, it would reinforce expectations for rate cuts, likely weakening the USD and pushing AUDUSD through resistance. The bearish case, with a 60% probability, aligns with the longer-term downtrend and expert analysis. If the U.S. data comes in stronger than expected, or if risk aversion returns to the market, we could see this rally fail, with price rotating back down to test that critical 0.6420 support. A break of that support would be a very strong bearish signal. Looking ahead, keep a close eye on the upcoming U.S. ISM PMIs, ADP employment, and PCE inflation data. Also, Australian GDP figures will be released, which could cause significant volatility. These data points will be crucial in determining the next directional move for the pair. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own thorough research and analysis before making any investment decisions. Thank you for watching Explain the Charts.